Let's get some analysis, what's going on in the States and also locally. To take us through it, Pete McGuire joining us from XM. Pete, good to catch up midweek. All right.
Good to see you, Andrew.
So those bond yields, certainly rising significantly overnight our time. What's going on? What's driving that at the moment?
Well, good morning. I saw as far as equity market, you saw that tail off. Nasdaq was only down 0.16, so that was not a bad night, but the Dow was hit harder. So I've noticed those bond rates, they've had a dramatic move over the last, say, 4 to 5 months. You've seen from 175 up to 3.5 for the 10-year and then back to about 2.75. And it's are we going to see a 2.5 handle very, very shortly? So, they're volatile. They're incredibly dynamic, and that sets everything up for currency markets. And we keep a very close eye on bond markets to, I think, get an appreciation where currencies move next and what happens with King Dollar and everything moving forward, Andrew.
What did you make of those comments from the Fed speakers overnight, Pete? Pretty much telling the market, listen, don't get your expectations up just as far as a possible rate cut as early as this time next year.
Well, I'm conscious of that. And I mean, the ongoing rhetoric, there's no doubt that, are we going to see 75 in September? I would say probably I'll put my hat on that number, considering where we are with inflation, looking at UK and what's going on across Eurozone. So the US, I can't see it backing off. The next part is how many more rate rises do we see in the fourth quarter? And are we going to see any? And then we've got to see how everything moves. It's easy because those guys are sitting, unfortunately, behind the curve. And we've got business surveys suggesting that the picture has deteriorated further in the third quarter. We've got those unemployment numbers coming out Friday night, and if they underwhelm, then that's not going to be a good sign for Wall Street or Main Street. And the Fed's got to take into consideration those metrics as well, as far as where dollar trades and the overall equity market economy, Andrew.
So all that considered, Pete, do you think it's inevitable that the US is going to fall into recession? I mean, technically, you say it's already there.
Yeah, technically it's already there. And yes, I've got to worry about where we are in this, in 3 months' time, Andrew. Are we continuing as far as negative, and how do they get themselves out? I mean, that sets you up for a classic play being stagflation. And whilst they've got to get inflation under control, I've got US dollars. I'm just looking here, 106.35. It's bounced in the last couple of hours. What we're seeing is, I think, very dynamic markets. And the other side of it, of course, is the Fed, like every central banker, is trying to guess how bad things are and if they are that bad. And we don't know. We're just sitting here on Main Street appreciating the cost of goods increasing, as Mary Evans says, out of San Francisco.
Pete, are you liking gold at the moment? Certainly it's seen some significant support over the past week or so, obviously in the prospects of a weaker economic growth, but also now what's going on with those geopolitical tensions, particularly between US and China.
Yeah, exactly, Andrew. Back at 1775, it's given up a little bit of that hot steam, but over the last month, it's been dynamic. 1800 down to nearly 1700 and back at 1775 now. So huge dynamic moves, $175 worth of movement. And I think from a trading point, put that cap on first. That's what they want to see. They want to see something that's moving and something that's quite electric, and gold hasn't disappointed. As far as geopolitics, we've got to see how Nancy plays in Taiwan and what the rhetoric coming out of China. I'm keeping a close eye on it and understanding that, they're starting to ramp up as far as military exercises, and the US has got Ford aircraft carrier. I think they're the size of those anyway in that region, or certainly very large naval ships. So coming out of Okinawa, you've also got military activity from the US. So it's going to be very interesting over the next couple of days how this all plays out from a geopolitical stance.
Pete, let's bring it back home. Did the RBA get it right yesterday?
I think so. Though you've got to be conscious as far as, if we take a lead from New Zealand, Andrew, and you've got a very soft kneecapped property market, are we following suit here? So, again, we're probably playing behind the curve considering what they're doing over the ditch. I think that they have played it right. where are we come October? You know, a couple more rate rises. Do we see one in September as aggressive as what we saw yesterday? Inflation, have we got it under control, or is it still galloping ahead? And yeah, we could be sitting here with another 1.5 points on there by Christmas, Andrew.
How you mentioned New Zealand, we just got the latest details out just as far as employment. The unemployment rate actually ticking up a tad in the latest figures out today. I don't know whether you've had a chance to have a look at that. Currently sitting at 3.3% for the June quarter.
That's low, isn't it? I mean, you know, like I think we discussed that the other day. If you're the same in Australia, if you want a job, you'll get a job. There's plenty of work out there. Whether you get a pay rise, that's another matter. But the issue is, well, that's the storyline with high inflation. You certainly need to capture as much as you can get because cost of goods are all going up. But yes, that's not a bad number coming out of Kiwi land, and our numbers are very strong, and also in the States. So that's the factor. You know, you're hard to say it's in a recession when you've got record low unemployment, but I know it's a backward-looking metric, and it's the last one to fall sort of thing because there's all the other data points that you look at before you worry about that unemployment.